So yesterday, on the 3rd of June, we had a 400-point pullback on the opening, almost 450. Now, what happened? First of all, we had information coming in for the manufacturing sector, and that spooked investors because manufacturing is really poor. In fact, when you look at the Dallas Fed, Chicago, New York, those three groups, all weak. That's not good. So that's telling us that there's weakness in the economy. Oh, but nobody wants to hear that. We keep hearing how great the economy's doing, how strong it is, how it's growing, when it's not growing. They tell us it's growing. Listen, any of those shows, CNBC, Fox News, economy's growing. No, it's not. So when we got those numbers yesterday in manufacturing, that's bad. And so the big institution money started to sell. So take a look at what's going on. I put up a chart here for you because something interesting. If you look at the spiders trying to make a new high, you look at the banks, that's very important, trying to make a new high. And here's the gold outperforming everything. But look over here. Nobody wants to talk about the small mid-cap stocks. It's the small mid-cap stocks. That's the show. That's it. If those don't catch up, then this market's going to tank. But nobody wants to talk about it. Just like nobody wants to talk about what's going on with the manufacturing. Why is manufacturing so bad? What's going on? Well, because remember, when Joe Biden came into office with his American Rescue Plan, just like when we had the beginning of Medicaid and all those programs, they first started, remember, we were told, especially with Medicaid, oh, these are only for emergencies only. We don't use this for emergencies only. Emergencies only? Are you kidding me? Medicaid's out there all day long, every second of the day. So, and it's the same thing going on with Biden. When he brought in all the American Rescue Plan, well, it just loaded with socialist programs that disincentivize people from wanting to go to work. And it's still happening today. So you can't get people back into the factories in the United States to manufacture. So when we're not manufacturing, the economy gets worse. Why? Because we have to import everything. And when you import everything, you're importing inflation. So when we found out yesterday just how bad our factories, our production is doing, the smart money started to sell. So watch this here. So here's the S&P right now. I think it was the 22nd or 23rd of May. And that's when we got the report from the minutes of the meeting, the Fed meeting. And they said, oh my God, we still have inflation. And the market tanked, remember, about 600 points. Hasn't been able to recover. So we're kind of stuck in a range right now, right here. See it? Look at that 520 on the S&P. That's going to be crucial. And every time they come down and they hit that, the plunger team, the plunger protection team comes in and makes sure they move the market up. Yesterday was a great example. Yesterday we went down over 400 points, and then right before the close, they wiped out the 400 points down to, I think, like 150. Because the plunger protection team came in and started to buy stocks to make sure we moved off that 520, because they don't want to be anywhere near that, because underneath that 520, we have a whole bunch of stops in there. So now there is a real struggle to get above that 533. That's their target, to try to go to 540. So most likely we'll be consolidating for a while. Now, nothing wrong with consolidation. We can make some powerful moves. The longer a stock or an industry goes sideways, when it finally breaks out or it breaks down, you get real power behind it. So the longer you go sideways with a stock or an industry, it will drop or go as high as wide as this industry or stock is going sideways. So the market right now is depending on rate cuts. Well, wait a minute. Rate cuts. They're telling us rate cuts, we're going to have one in September. That's not going to work. So they've been trying to drive this whole market again. Now, again, if you go back and look at October 2022 to where we are today in June 2024, the market rallied with 5% interest rate. As I told you last week, how did that happen? I thought we were supposed to be at zero rates. Well, we got duped. We didn't have to be at zero. 14, 15 years of zero rates have destroyed the wealth of the working man, created monster wealth for Wall Street and the very wealthy, the asset class, because they love inflation, but destroyed Main Street. So now the problem is that when you have the asset class making all the money for 14 years because they drove the stock market up with zero rates to create inflation, so the asset class could get the money back first. Remember, they lost a lot of money in 2008, just like the folks on Main Street. Well, they wanted that money back first. But now the problem is we've been keeping these interest rates at zero until 2022, which they moved it to 5% because they had to fight inflation. But nobody's thinking and saying, well, wait a minute. If we had these rates at zero, Now we don't need them at zero anymore. What the hell happened? Well, again, as I said, those rates at zero were for stock buybacks, and I went over all this last week, but we're for stock buybacks to drive the stock market up, and that creates tremendous inflation. All that printing of money to buy treasuries to drop interest rates down so you can move the market up and print all that money, give to CEOs so they buy their own stock back. But now we're still going up at 5%. Not going to last. It won't last. And when they're saying they're only going to do one rate cut, it's not going to work. So that's why it's very important that we keep an eye on this high of 533 to 540. They're going to try to go to that 540. So I think we're going to go sideways for a while, and that 520 is going to be the base. Now, let's take a look at some stocks. Now, my Pro 2 color-coded chart, now we've been doing really well shorting the oil stocks. And that's another thing that was interesting. Remember, we had this big sell-off on Monday, and remember the deal was on Friday, OPEC's going to cut their production. So everybody jumped in the market buying on the rumor that they're going to cut their production, or they're already cutting production, but extend it to 2025. So what happened was everybody buying oil stocks like crazy. And I told my gang members, let's continue to stay short. I said, let's continue. See my color-coded chart here? We had a beautiful setup. We started short right here where it was red. And I told my gang members, do not listen to them. They're going to have that one burst, that run around, and they're going to give it all. And that's exactly what they did. Come Monday, the smart money bought into the rumor they're going to extend cut back the oil production. And then when they finally did, you went from rumor to fact. They all sold into the fact early in the morning when the market opened. The market tanked, went right down 400 points. So, but I still think we're going to have a lot of selling in oil, especially when you got our GDP number came out also telling us our GDP is going down. We're not growing. So if you're not growing, you're not going to need oil. So, and our color-coded chart is never wrong. It's telling us, hey, stay short. And then what happened? They bring out Aunt B. And Aunt B said, oh, no, don't worry about that number. We're going to adjust it right back up. Don't worry. No, it's going to be this low. We're going to adjust it right back up. Are you kidding? We're going to adjust it right back up? There's no need for oil, especially if we don't do manufacturing. With all our manufacturing, all we're doing is creating jobs overseas. So we're creating jobs overseas. We don't need oil here in the United States. Our factories are almost empty. We're not manufacturing. And they're trying to tell us how strong our economy is. Are you nuts? So look at Schlumberger. When our chart turned from green to red, look at that beautiful sell signal. And by the way, you can use these charts free for 10 days if you want. You can have our stock picks free for 10 days. Just go to my site, philsgang.com, or click the link in my bio. But look at what we're doing with that's our oil. But look how well we did with our gold. Our gold stocks have done really well. Look at this. This is our miners, GDX, and also GLD right here. See, GLD, those are two ETFs, but our big money maker has been our GDX right here. Look at that. Doing beautiful. Now we're having, if you're in gold, don't give up on gold. Just take some profits, put your stops in, because gold's going to go a lot higher. Why? Because the smart money is not going to go into bonds. You think smart money is going to go into bonds looking for safety? Of course not. They don't go to bond. They go to gold. And remember, too, we still have all these central banks buying all kinds of gold. Nuts how much they're buying. So I think gold is going to get even better. I think gold is going to break out. We're going to get a little consolidation, a little pullback, but don't give up on it. If gold can make that new high, if you can get GDX, the miners, okay, and get above $38, they'll continue to go higher. So I think oil's going to go down. Gold's going to go higher. IWM, that's the one you got to watch, because IWM, as I said, there's the problem right there. IWM is not keeping up with the spiders. So you got quite a divergence between the spiders and IWM. So, and again, there's no volume. You know, the volume on the spiders average is around 75 million a day. We've been averaging about 35 million a day, 40, 25 million. And that one day when they rallied the market, when we had that big rally because of oil, they're going to, everybody's betting on oil is going to go up big time because they're going to cut back. We had 90 million shares traded that. They sucked everybody in, and then they pulled the bids out whacked them, and oil went right back down. So look, I always tell my members, trust the trends, trust the money, follow the money. And the chart that we designed, that's what it does. Follow, where's the money going? And if you follow the money, that means you're following the trend. The trend is always your friend. You'll never go wrong. Look, work with us for 10 days. Check it out. If you do make some money, please also remember to help St. Jude. So that's about it. So keep your eye on gold. I think you'd be pleased that gold is going to go higher. I think as I said, your oil is going to go lower and the market is going to contract once we break that 520. Now, maybe after the election, I don't know. Okay, but we certainly know that there's no need for oil right now, okay? And there's a lot of need for gold. Who the hell is going to buy bonds? Are you nuts? See you on the chart. Click the link in my bio.